Hello, guys. Welcome back to UCL Forest Academy. Once again, you are welcome back to UCL Forest Academy. So, in today's lesson or in today's video, I'm going to be analyzing USD pairs like Euro USD, is NZD USD, Odd USD, GDP USD from higher time frame down to mid time frame to show you my view, to show you what I intend to do on this very particular pair. You guys know that I've not been able to be trading this USD pairs for some like a week plus now because the trend there is looking very confusing because some certain things there's no setup there. But now I think the market is about to give me a setup from a higher time frame. So what I'm about to show you now is this: number one, you need to know that if you watch this video to the end and then you accept what I said, or maybe you also share your view at the end of the whole day, then let's say if the market respects this my zone, if the market respects this my zone, there's a higher tendency that the market is going to drop like 300 pips or 200 pips. If the market respects these zones I'm about to show you now, this I think this is going to drop 200 or 300 pips. That is what is it. But if the market disrespects that zone, there's something I want you to know is that you have been able to know that the overall trend has switched. Let's say if the overall trend is downtrend, you'll be able to know that the overall trend has switched from a downtrend market to a bullish market. Now, all you have to do is either you trade the counter trend or you wait for retracement to retarget to the upside. What I want you to do is to watch this video to the end. Just watch it to the end. There's a lot of benefit packed on a very particular video that will enable you to know how to do this. One of the things you're also going to gain again in this very particular video is that you're going to know how to analyze the market from higher time frame down to lower time frame, which is like top down analysis. Okay, so now this is not like the first time I'm making such a video. If you come to my YouTube channel, come down to playlist, you are going to see where I wrote currency pairs breakdown. So I've been doing this thing from the beginning of this very particular year, but I stopped because of some certain things that came along my way, like work came, like I was too occupied. That was the reason why I stopped. But for now, each time every weekend come to my channel and then go down to currency pairs breakdown on my playlist, you are definitely going to see the very particular the new view I have for every USD pairs. Okay, so it's going to be helping you to maybe to help you in your own path as well. All right, so please, what I'm begging you is to like and subscribe to my YouTube channel. Don't forget to leave the notification button on. If you don't do any of these things, how can you be able to see the next video that I want to post? And what I do here are quality tutorial videos that are meant to help you to understand how to trade the forex market from a beginner's level to an advanced level. I've made a couple of videos here that is going to assist you. What I beg of you is please like and subscribe. Like and subscribe. Don't forget to leave a comment and also share the videos. All these things encourages me to come back the next day to keep making more videos. Okay, so before we begin a particular lesson, I also want to remind you guys this: please, I am not a market maker. I am not the market maker. I'm not the one that tells the market where to go. I analyze the market like you, the same way you analyze the market. I'm not going to take any pride here. I can hit stop loss, the same thing. Do you understand? And you should know about that. So it's not at the end of the particular video now. You see what I did. You say, fine, the market is going to react from that very particular zone. Now you went and used your entire account and trade it. Please, I'm begging you. That is not it. You need to have a risk management. And there is need for you to go and redo the analysis to know whether you are seeing the same thing. Okay, please, that's what I'm begging you guys. All right, so let's start the video right away. But before we start, one more announcement. Don't forget that our online registration class is still running. Our online mentorship program is still running. All you have to do is to use the number that you're seeing on the screen, this particular number, communicate with us on WhatsApp, or either you take the one on the description. They are all the same. Go to the description, you're going to see a number there. Then use that number to reach out to us on WhatsApp to get the procedures or how we operate. Do you understand? But let me give you a hint. We are more like a private online mentorship, online academy where we are going to be mentoring you privately. We don't intend to teach all our students once. We don't even do anything like Zoom call because we understand the distraction that comes to it. One person might want to ask question, the other person might want to ask question, this one will want to ask question. At the end of the whole day, we will stay like 3 hours or 4 hours, with maybe one person might not have the mind to ask questions. But when we think about the fact that we're going to be mentoring you privately, where we share you a recorded videos, after watching it, if you don't really understand, you can request for more videos, you can ask your question, then we're going to redo the videos based on your question and still redirect and still send it back to you. Okay, this is what you really need. And there's no how you will not come, you will not call us, we will not pick. We are going to pick. We're going to use every versatile means to make sure you understand any topic we teach you before we go over to the next topic privately on your own. Oh. The same way with another person, the same way with another person. So this is what we do. Okay, and don't forget that this is a lifetime mentorship program. It's not like after 1 month or 2 months you're done with you. No, it's not like that. Okay, so I think I've delayed a little bit. Let's begin the video right away to start analyzing the market from higher time frame down to lower time frame. So we're going to be starting with GDP USD. I want to start with GDP USD first of all because this one looks more cleaner than the other ones. I want to start with GDP USD to show you guys my view on GDP USD. So first of all, what I'm going to do is I'm going to clear the chart. I will clear the chart, and I think the chart is already cleared. So first of all, the way I normally do it is that I always like to go to monthly time frame. Somebody will ask me, why do you love to go to monthly time frame? What is it that is on monthly time frame that you are going to monthly time frame for? So the reason why I go to monthly time frame is this. I go to monthly time frame because I want to see the overall trend of the market, because I want to see what the overall trend of the forex market, because this overall trend of the forex market enables me to know what to do when the market get to that very particular what to do when the market get to that very particular zone. I don't know what is wrong with my particular screen. I'm just trying to delete the entire thing on the chart. Please watch the video to the end. Believe me, you are definitely going to understand something here. All right. Okay, we have done, we have cleared the chart. We have cleared the chart now. So let's first of all go to monthly time frame. One person is going to shout now, why are you going to monthly time frame? What do you want to do on monthly time frame? Is like, don't worry. Remember what I told you guys at earlier before I started the video. I want to say, I told you guys that any zone I want to show you guys now will be a zone that will tell you whether the market is going to buy for a long period of time or whether it's going to sell for a long period of time, or whether the overall trend has switched from a downtrend market to an uptrend market. So without not wasting much of a time, let's start. So this is it now. This is a GDP USD on monthly time frame. The market is strongly bearish. So now we could just see that what the market has done here is that the market has actually broke a structure. The market has broken a structure this way. Remember what I told you guys on that very particular. Remember what I told you guys on that advanced market structure lesson, where I told you guys each time the market prints a higher low, it always prints a lower low, and the next thing there's a need for the market to retrace and print a new higher low and then to print a new lower low. So you could see that is what we expect of the market to do, but it's not going to be very easy for the market to do that on monthly time frame. So what I'm going to do now, the next is to plot my Fibonacci retracement to know whether this thing has gotten to a discount level on monthly time frame that could determine that there's going to be a continuous sell to the downside. So what I could see then is that the market has mitigated a monthly time frame 78% fib level. If you don't know what I mean by fib levels, just go and watch the video I have done on Fibonacci retracement tool here on my channel. Come down to playlist, go down to playlist. You're going to see Fibonacci tool lesson, or you can come to market structure VIP lesson. I've extensively explained on that part that will enable you to understand what I mean by there. So now the market has tested a discount level. It gave a sniper entry, and that's why we saw all this massive sell to the downside. But there's something to pick out here. Irrespective that the market respected here and sold massively to the downside, there are a lot of people that have marked out this zone on monthly time frame, and they have gone down to something like a daily time frame, 4 hour time frame to refine it. I believe that most swing traders will not even be entering the market on monthly time frame. I think that it's not like I even think that nobody does that, because on monthly time frame, the thing you see here are so strong. So to an extent that if you go in for a buy or for a sell here, your stop loss alone will be like 230 pips, which is too much. Okay, so now when we look at this particular stuff now, the market has really tested this zone, but the market did not tap into our refined areas. The half of the particular monthly time frame POY is already a, what they call it, is a weekly time frame POY. The half of the weekly time frame POY is a daily time frame POY. The half of the daily time frame POY is the 4 hour time frame POY. This is how they are half. Remember what I told you by activating the middle line. All right. So I have not come to teach you analysis. I've come to show you what I intend to do. All right. So look at this now. But you need to also understand that before the market will sell down to the particular area, that is going to take so many months. But with what we can see here, we have already known that the market has already mitigated a monthly time frame POY. But we need to see the monthly time frame POY. We need to see the market tap into the half of the monthly time frame POY so that we can keep selling, so we can have that strong mindset to keep selling down down to the particular down to the particular low. What is the simple mindset behind this thing? A higher low, a lower low, a new higher low, a new lower low. Very simple. Do you understand? So now let's remove it. So now what I can see there now is that the markets, I did not come to meet the market here. The market has sold, and now we could see the market trying to buy. So who knows whether this buy is to get to a particular level, to get to the half of it, then to start selling to the downside. Who knows? Nobody knows. But we want to follow the pattern. So right, so I'm going to be trying to read the retracement, to follow the retracement this way, to see what the retracement is doing, to know whether I am to buy or to sell, irrespective of the overall trend here on monthly time frame. So I can see now this is a BOS here. This is a BOS, this is a bullish BOS, right? And then the next thing we could see here is a full retracement of that BOS, and the market did not disrespect the point of interest of that particular BOS form. It came back and mitigates the full retracement of it. The next thing now, the market is buying. So what did the market want to do? Is it that the market want to keep buying, to take out this high? We don't know that if the market take out this high, the market, that means you want to get to a particular what zone, and from here to a particular zone, it's going to take a very long period of time. So now, what we are now going to do is that, since where we want to sell from on monthly time frame is still very far, we are not going to follow the internal retracement to keep buying to the upside. Reason because we want to buy, because we have spotted the BOS here, and we have spotted the full retracement, and now the market is now looking, pointing to the upside. That means the market might want to take out this very particular high to mitigate the monthly time frame half of point of interest, like the half of the monthly time frame point of interest. So that could be what the market wants to do. All right. So now we have to go down to weekly time frame to now see whether we can see a higher time frame change of character that can enable us to target to this very particular what high, because as it stands here, we have not seen any change of character. So now let's go down to weekly time frame to see whether we can see a change of character that can enable us to keep buying to here, or whether we can see an unmitigated point of interest, maybe on daily time frame, to keep selling. Anything like that, don't worry. Let's go down to weekly time frame now. So on weekly time frame, remember our plan is to keep buying, to get here, right? That's our plan, right? So what we're going to do now on weekly time frame is to mark out our trading range, which is this particular high and this particular what low. So let me, oh sorry. So what we are now going to do on this particular weekly time frame is to mark out our trading range. Now, what does a trading range does for me? A trading range enables me to know when the overall trend has changed from a bearish trend to a bullish trend, starting from a monthly time frame or from weekly time frame. The moment my trading range has been broken, it tells me that what I should look for is to wait for a retracement, or if I cannot be able to wait for retracement, that I should go into a counter trend, having known that the market has broken a higher time frame what high or low. So what I mean is this: as the market is selling, the market gave a little retracement and kept selling to the downside. So you can agree with me that there's a BOS here, right? This is the last BOS the market formed before getting to the particular higher time frame key level, before mitigating this monthly time frame key level, right? And now we can see the market buying to the upside. We all know that this thing is going to be like a bit difficult before the market wants to break above here. But if the market break above this particular high, number one thing is that I'm not going to feel bad. You get me now? I'm not going to feel bad. The thing I'm going to be very happy is that I've known that I have gotten a monthly time frame, a weekly time frame, a daily time frame change of character, and overall time frame change of character, a major structural one for that matter. That means that I need to scale down to something like 1 hour time frame, or like something like 30 minutes time frame. If I see a small retracement, if I see a change of character like this, I will start selling. I will start taking that counter trend with a reason, because the market has changed character on a monthly time frame. Why did the market change character on a monthly time frame? Because it has mitigated a higher time frame key level and is now pushing to the upside, maybe to target this particular external high. All right. So now when I start selling to the downside, even if this thing tag me out, I can stop selling for the meantime. Or better still, if you are the type that love trading multiple pairs, you can leave it and mark out your discount zone again and wait for retracement to buy to the upside. But you just need to know it's going to take long. It's going to take long. But if you trade only one pair, just go in for a counter trend and start selling to the downside. All right. So if this thing breaks below again, if this thing breaks below, it will also tells me that the trend continues to the downside. I have to wait for a retracement, or maybe look out for a counter trend and then sell. Now, you just need to understand, whenever I mention trading range, I end up doing one thing. I end up doing like two things. And those two things I do are are just two stop losses, and those two stop losses make a very vital decisions for me. Now, the first stop loss is to go in for a buy, is to push myself to the market, tell the market, look at me, you can do anything to me, but you just need to know anything you do to me now. The number one thing is to do me a favor. The second thing is, if you fail to do me a favor, you have entirely told me where you want to go to. Do you understand? That means that if we have a structure break above, the market has not done us a favor, but the market has tell us that he wants to target to do a particular external high. That means that what we have to do is to go in for a counter trend and start selling to the downside. If you don't understand all these things, there is a VIP course for you. Why won't you just pay? Just pay. You don't want to spend many dollars before you get the knowledge. You just need to pay and join. Multiple of these will be shared to you, and you see the idea, you will see the real idea behind this very particular strategy. All right. So now, looking at this very particular stuff now, what I'm now going to do is that I am not going to sell. Why am I selling? Is because I have an unmitigated zone here. Since we had this BOS, these red candles have been a massive sell. And all this thing will be treated as a retracement, and it will also be treated as a retracement to do us a favor. Do you understand? To do us a favor for the market to sell to the downside. Now, we are not going to target an unrealistic take profit, number one. We are not going to target an unrealistic take profit. We are not going to do that. But we are going to target a realistic take profit, having known that there is a higher tendency that the market will can take us out, retrace, and start chasing the external high. Something like that could actually happen. So now let me now scale down to, so first of all, our trading range has been seen, and I can even mark out the very particular weekly time frame POY. Then you will now see how I will keep refining it when I scale down to other time frame. So the market is now at the weekly time frame POI this way. Don't worry, we are not entering for any buy or sell on weekly time frame. Calm down. We are not entering for any buy or sell here. When we scale down to other time frame, you'll see what I intend to do. So now this is daily. So now we are now on daily. So now when we scale down on daily, remember what I told you. The half of a weekly time frame order block or POY or whatever you call it, or any name you have given it, is already a daily time frame POI. So we could see the half of it now is this very particular range consolidated POI, or you can call it a consolidated POI, or you can call it a range created POI. Okay, so now what I have to do is to shift it back to that very particular range created POI like this. So remember that this particular POI is just here to do us a favor. It's just here to do us a favor, and that favor is to sell. But if it taps us out, we just need to know that the overall trend has changed, so that we will not have to sell, or maybe to wait for a retracement to keep buying to the upside. So now look at it now. So all these things is like BOS full retracement. All these things looks like this, a BOS full retracement to keep selling to the downside, maybe to somewhere here to start pushing again to the upside. Okay, something that look like this. So now let's remove this particular stuff now. So now the way it stands, am I going to go in for a buy or for a sell on daily time frame? No, I'm not going to do that. Honestly, I'm not going to do that. But look at what I intend to do now. Now I will now have to go back to start remodifying things. I will now have to start looking at internally what really happened here. Also remember that this thing I'm doing is what people call a counter trend. But on weekly time frame, daily time frame, it is not really a counter trend, or because this is like a full retracement to mitigate an unmitigated zone to start selling to the downside. All right, it's like a full retracement to mitigate an unmitigated zone to start selling to the downside. But when you are on 1 hour time frame or 4 hour time frame or 30 minutes time frame, you are right to call it a counter trend. You are right to call it what? A counter trend. You will tell me that I'm standing on the way of price. Yes, yes. Do you understand? But we have our decisions to that. Okay. So now the way it stands, I'm now going to go down to 4 hour time frame to try to look at what really happened inside these consolidated areas, to see whether there is a particular candle that I can mark out, because that does not mean that I can just mark out all these things and start. If I try to say that I'm selling from this particular daily time frame, the stop loss alone will be like, the stop loss will be 55 pips. If I take the half of it, I'm going to take the half of the daily time frame zone now. The half of the particular daily time frame zone is already a 4 hour time frame zone. Okay, so if I take it from here, it is 54 pips. But if I end up getting it at least to somewhere around 40 pips, then we are going to target 40 pips times 4, so that you will not scream. We are going to target 40 pips times 4. That means even if you use the least loss size 0.001, you are going to lose, they are going to be risking $4 to make something like 20 USD, or to make something like 25 USD. or we're going to target that like 1:6, because any sell I see here going to be a long term for me. So now let's scale down to 4 hour time frame. So this is it now for our time frame. Can you see people are going to call me a counter trend trader because of this? I already know, because I just want to sacrifice 2 stop loss to get a something here, but I believe I'm not going to sacrifice anything. This is going to play out for me, for crying out loud, it's going to play out. So now look at it. Now look at every particular place we have marked out. Look at there we marked out. So look at what the market did. Somewhere around last year during December period, I think I was somewhere around there. I shared a signal to my VIP community, telling them that when the markets come over to a particular candle here, a particular candle here, that we are going to sell to the downside. So we even spotted a clear of liquidity above it like this. We spotted a clear of liquidity. We are very, very happy that we are now about to see a Christmas setup that will be able to give us money for us to flex during the Christmas period. But what this thing did to us was very painful one. It just came up, came so close around the 61% level. The market sold to the downside. But when the market was selling, we were even happy that the market has created an inducement area like this. We are very, very happy that the market has created an inducement area like this. But now, fast forward to this particular year, some of us are already forgetting that setup. We have already forgotten it. And I'm trying to bring you guys back to it. So now the reason why I'll be marking out that candle again is because that candle remains an unmitigated candle for me. So look at it here. Look at that candle. So the way I'm going to mark out that candle, you see, can you see how I'm refining that very particular weekly time frame point of interest? Look at the way I'm refining it. So I have shown belief. Don't forget to believe what you have done. Don't, because of you have seen what I'm doing, you say, it be like his own is going to play out. No, no, no. Don't. I'm not the market maker. Be rest assured about this. Trust your own setup. So I'm going to extend it like this. Then I will try to leave it this way. So like this. You can see. So and this is how I have refined the zone. This is how I have already refined this very particular what zone this way. So this is a very particular candle, and we have though this is not really a BOS, though this is not really, this is like a clear, this is like the market clearing, taking out some liquidity below this low. All right, so let's see what is happening. So this is it now. So we see that failed retracement that could not get here. So now we're going to keep it this way. So what I'm not going to do now is that I have to compress the chart, come back to somewhere around there. So we could see that very particular place now is already looking like this. So this is like my inducement area for this very particular setup. Now I'm going to reduce the 54 pips to under this very particular low. Keep it like this, keep it this way, and then keep it well, keep it well. We're going to keep it very well. Keep it very well so that you not end up missing out on it. So the market can come very close, and then the market will not what. Then keep it like this. So now we could see this time around we are risking 40 pips. We are risking what? 40 pips. If I try to expand, let's see. We are risking 40 pips. So you can see we are risking 40 pips this time around. And then to for me again, the reason why this setup is really giving me some little bit of confidence is because there's a fair value gap here. There's a fair value gap here. And I try to capture the half of that fair value gap because this market is very tricky. It might even want to test the half of that fair value gap after it must have done collecting liquidity from this high. It might want to test the half of that fair value gap to start dropping to the downside. Anything like that can actually what happen. We have spent so much time on this very particular GDP USD. So the next thing to do is to target 1:6. So this is 40 pips, and now we are going to target 1:6. So which is somewhere around, I think somewhere around 250 something pips. 200 and what? 250 something pips. 1:6. So let's leave it like 250 pips, and then go back to daily time frame. Look at where my TP is. Look at where my TP is. My TP is currently at a daily time frame, a fair value gap. So my TP is currently situated and kept at a place I normally call a draw on liquidity. I call it what? On a draw on liquidity. So there's a higher tendency that the market, if the market respects here, it will want to chase this very particular fair value gap before start pushing to the upside, maybe to break this very particular external structure high. And then we could see that the market has actually taken out the very and we can see that we are trying to sell from a week. You can see we are trying to sell from the what? From a week. There's a video I'm going to be posting, I think somewhere around next weekend or maybe on Tuesday. Today is Tuesday, so maybe on Thursday, there's a video I'm going to be posting about hidden zone. There's a video I'm going to be posting about hidden zone. There you understand how I always trade hidden zone. You're going to see multiple setup I took on BTC USD that I took from hidden zone, and this hidden zone is not a new topic. It could be something you know, but you don't know how to implement it. Okay, so I've delayed a little bit on a particular GBP USD. I think it's time for us to go over to Euro USD. So don't forget, on Thursday, try to check out my channel. You are going to see a video called Hidden Zone, and you see multiple things I did on that hidden zone. It will help you to know the reason why all these candles, the full body candle is already a week on daily time frame. So I'm going to keep it this way, and I have now accepted one thing like this. If the market come, tag me in, sell to the downside, here we exist, the market push to the upside. Or if the market do something that look like this, if the market tag me in, sell a little, take me out, giving me an overall time frame change of character. Has given me what overall time frame change of character from weekly time frame. All I have to do is to maybe on 1 hour time frame or 30 minutes time frame. If I see a change of character like this, I will start selling to target any discount what area, anything is a win for me. Okay, so that is it. So please don't forget, if you have been looking for a free telegram channel where you want to be getting free signals, always try to look at the number we have on the description. There is a link we have on the description below. It's going to redirect you to a particular free telegram channel of us. We normally drop free signals here every week. We drop free signals here every week. Even this thing I'm analyzing, I'm going to drop it here on this particular place. So please try to use that link. Come and join for free. It's just for free. Okay, and don't forget to leave your view on the description below. Now let's go to Euro USD. Okay, so this is the place we intend to sell, and we are targeting 1:6 as it stands. With your 0.000 with your 0.001, the last loss size, you're going to make 25 USD. You are going to lose, you're going to risk $4 to make 25 USD. That is 1:6. Very good risk to reward ratio. Now let's go to Euro USD. Just be rest assured, anything that we see here on GDP USD must be seen on Euro USD. If it is not seen on Euro USD, there is a problem, because all these things move in the same direction. They moves in the same what direction? They moves in the same. So we're going to clear everything here. So let's clear everything. So this time around, we're going to go back to monthly time frame. This one is going to be very faster. But this very particular Euro USD is giving me a little bit headache. I want to show you guys something. Now we have already seen there's a BOS here. There's already a BOS. The market's retrace is already consolidating here. If you try to look at the internal structure here, remember that that GDP USD is pointing on monthly time frame that he wants to go to the upside, right? He's showing us clearly that he's targeting that external high. Now, Euro USD now, the way it stands, it just looks like the market came here, consolidated, and then the market is now trying to sell to the downside. But we need to remember that the market has broken a structure here. The market has broke a structure this way. And you see the market has broke a structure. And that structure it broke. This is not really a break of structure. Instead, the market came to rebalance a fair value gap here on monthly time frame. That fair value gap became back to rebalance is now giving him enough well to start pushing to the upside. Who knows, because the market has not gotten to a discount level here on monthly time frame, that made him to give this little retracement this way. That made him to give this little retracement to start targeting a daily time frame, a monthly time frame, 78% zone of this particular Euro USD. Who knows? Who knows, because it has not filled this particular place. That's why it's trying to target here. But be rest assured that what we do is that we follow the trend. Okay, we follow the trend. We try to keep to the rules. So now the way it stands now, the market has broken a structure. Normal is for the market to what? Retrace. For the market to what? Go back. So while the market is going back, we need to know that there is a fair value gap here. There's a monthly time frame fair value gap here. And I normally call this monthly time frame fair value gap a draw on liquidity, a place that a lot of liquidity is resting. And there's another fair value gap here as well. So this one is the most nearest one. This one is the most nearest one. So now we have to go down to weekly time frame. We know that what we need to be doing now is to buy, is to what? Is to buy, because the market has broken a structure and we are now taking a counter trend to take it to the upside instead of to wait for the market to retrace to start selling. But for crying out loud, this is a monthly time frame. For me to wait for the market to come up here, it's going to take it's going to even reach like August. Do you understand? So now let me scale down to weekly time frame to see whether I can get into the counter trend, or whether I can keep on selling the way I have already spotted a place to sell on GDP USD. So now on weekly time frame this way. So this is it now on weekly time frame. Look at that fair value gap here. So I'm going to delete it. We already know there's a fair value gap there. Now look at what I can see here. This is a monthly, this is a weekly time frame key level here. This is a support, stone, resistance already. That is, let me go back to that monthly and draw it very, very well for you guys. So let's delete it and then try to mark it from here, because this was where the origin move started. This way, okay. So now we could see this is a monthly time frame key level. The market has break it, and then it's either the market do something that look like this, respect it, keep pushing to like break and retest. Once the market break, it retest it and keep selling to the downside, or whether when the market retest it, the market will give a little retracement to start chasing all this external high, to start chasing the remaining liquidity above. Okay, something like look like that. We doesn't know. We don't know actually. So now I've marked it out. Now let's scale down to weekly time frame and then to see whether we could spot a zone. So the 1 weekly time frame, I'm going to be marking out my trading range, having known that Euro USD is currently at a monthly time frame support turn resistance. Support turn what? Resistance. So now I'm going to delete this thing because I like keeping my chart very neat. So now this is the last high the market formed. This is the last high, and this is that high that is meant to do us a favor and at the same time meant to do us a that is meant to give us another information of the movement of the price. Okay, so now this is the last side. Things here are not really clear, but let's get down to daily time frame to expand it very well. So this is it now. So this is our trading range. Actually, this is our trading range, and this is our trading range. We also don't need to forget that above our trading range is a monthly time frame fair value gap. Is a monthly time frame what? Fair value gap. So there's a higher tendency that if the market fails to respect this very particular height of our trading range and breaks above it, now we're not going to feel bad. Number one, the only thing you're going to know that is the market has rebalanced a monthly time frame fair value gap. Just one stop loss has been hit. So the next thing now to do now is to scale down to 30 minutes time frame. When you scale down to 30 minutes time frame, you now look for a change of character like this, a change of character. When you see a change of character on 30 minutes time frame, it is going to be a long sell for you. Two confirmation that will enable you to know that it's going to be a long sell for you is because number one, a higher time frame, a weekly time frame change of character, number one, a monthly time frame fair value gap that has been rebalanced, which means that price need to drop to the downside, and each time that price touch that monthly time frame fair value gap is going to sell, is going to buy depending on the trend of the market, like what we have already seen here. So okay, so that's like a win for us. So you can see we only have one stop loss here, and possibly we could have another stop loss here as well, something that look like that. And at the end of the whole day, you could say that it's only about two things we have to do here. Or if you are the type that want to say, I want to follow the trend, nothing concern me and this kind of thing, that means you need to wait for all this retracement to go in for a buy and target the remaining liquidity above here. Okay, now we could see now we are now engaging into a counter trend, but not only yes a counter trend, we will now have to mark out our point of interest. We consider that here gave us a clear of liquidity number one. Here gave us a clear of liquidity. If you don't know what is a clear of liquidity, oh yeah, go to my YouTube channel. There is a video I did on the reason why you struggle with SMC. There's a video I did on the reason why. Just come to this SMC tutorial. You're going to see it. A reason why you struggle with SMC. The reason, liquidity, the real reason you struggle with SMC. Watch this video and watch the liquidity masterclass. You will come back and testify. You will come back and tell me a very big thank you. Okay, this is the clear of liquidity here, and now this is that our daily time frame unmitigated candle. This was the same candle that me and my VIP student actually spotted on last year December, but the market could not get there. But that does not mean that we have not been trading Euro USD. I think we caught this move, we caught all this move, we caught this buy as well. Even this move as well, we caught it. So we follow the trend of the market. So now this thing can be treated as a inducement. This will be treated as what? As an inducement. So you can see to be treated as an, and what kind of inducement is here? This is an equal high inducement. These are what? This is an equal high inducement. This tells us a lot of things. This is an equal high what? Inducement. So there's a lot of stop losses just resting in the front of our unmitigated POY. On daily time frame, it looks very, very clean. It looks very, very clean. But when you scale down to 4 hour time frame, you will start adjusting all these things. But the truth of the matter here is that we can just keep it like this, the half of it this way, the half of it like this, and then stop loss above. So this time around, we are risking 50 pips. And if you risk 50 pips, what are you going to target? Like if you say want to target like 1:4 of it, it's going to be like 200 pips like this. 1:4, 200 pips. That means if you use your 0.001, you're going to risk $5 to make $20. If you use 0.1, you're going to risk $50 to make 200 USD. You can see how the thing is now. But that is not what I want to do. We have to refine it down on daily time frame, on 4 hour time frame. So on 4 hour time frame now, look at how it looks like. On 4 hour time frame, I'm going to refine it this way now. So on 4 hour time frame now, look at how it looks like. There's not even much thing to refine on 4 hour time frame, honestly. This Euro USD, this Euro USD. That's why I said I will analyze all of them for you. Then at the end of the whole day, choose one. But for me, if I decide to refine this thing much, because if I said I want to use this week, there could be a higher thing this is I could miss out on this very particular setup. So if I start, let me say that I want to use this very particular week now that cleared liquidity, there could be a higher tendency that I might miss out on it. I remember that sometimes last year that we are looking at the week to go in for that very particular sell, but the market could not retrace there. But there's no problem. All you have to do is this way. What you're now going to do now is that very simple. It's either you choose from here, it's either you choose to go in from here, it's either you can adjust it like this. If you adjust it this way, I think your stop loss now will be like 32 pips. It'll be like what? 32 pips. It is that way because you want to enter from that very particular week. You want to enter from that very particular week. Now we're going to reduce the very particular stuff like this. We refine it back to that very particular what week like this. So something that look like this, you get. Or better still, if you want, you can use the half of it, or you can use the half of that very particular point of interest. You can use the half because from here, just from here to here is like around 20 pips, right? It's like around 20 pips. Or better still, you can split your lot size into two. As in if you intend to go in with 0.05. Now what you have to do is to split it to 0.02. You understand now? Then give one to GDP that has given you a lesser risk. GDP gave you like 38 pips, right? 38 or like 40 pips is what it gave you. But this one is giving you like 50 pips. It means that if you want to sell from here, you're going to be risking like 50 pips. Hey, so what you have to do now is just you could just use like, okay, it's now 45 pips. It's now 45 pips. So let's say that this one is too big for you. You can use the GDP. Okay. So now I think we have to try for the odd USD. Let's check out for the odd USD to see whether we could look for a way to sell as well the odd USD. So remember what I told you guys. This is a higher time frame setup. This is a higher time frame. If the market respect that thing, there's a higher tendency that the market is going to sell for a long period. This one is not clear. I'm not going to analyze this one because things here is not really clear for me. I don't even need to dive more deeper. Things here is not clear, but you just need to know that this Euro USD and odd USD, when you this Euro USD and GDP USD is enough, is very enough for you. Like the two of them are okay for you to trade. Okay, like all these things move in the same direction. That's what you need to know. That's what for this one now. If I go to weekly time frame, try to see what the market is doing. The market has actually broke an external structural low. So what do you expect? Is it not to retrace? It's to retrace now. Then when we go down to daily time frame, then we'll see where is the place we should be looking to go in for a sell. I mean somewhere around here. The market is already respecting somewhere around there, but we have an unmitigated. Okay, this place has been mitigated already. Let's use this one. Sorry, I can't. I intended to analyze this old USD and NZD USD, but for now, I'm gonna stop on the particular list. I'm gonna stop here. So please, if you did enjoy what I did, please like and subscribe to my YouTube channel. Leave your notification button on. Will be whenever we see other setup like BTC USD or other ones, we're gonna try to analyze it as well and share. Okay, please don't forget whatever I did on a particular video is my view, not the market view. This thing can hit stop loss or this thing cannot what hit stop loss. You understand now? So that is it. So please, we're going to end here. And then I want to say, if you have watched to this very particular end, I want to say a very big thank you to you. Don't forget to leave a comment. Don't forget to share the video. And thank you, and may God bless you.